Everything just flipped. The trade that was pricing in war is now pricing in relief, and markets are moving fast. Ray Watterson here. Let's get straight into it. Less than 2 hours before his own deadline for Iran to reopen the Strait of Hormuz, or face what he called devastating attacks on civilian infrastructure, U.S. President Trump announced a 2-week ceasefire with Iran. Iran responded by agreeing to cease counterattacks and provide safe passage through the waterway, conditional on attacks against it stopping. That was all markets needed to hear. The reaction was immediate and broad-based. Oil collapsed. Brent crude dropped 13.8% to $94.27. U.S. crude fell 15.4% to $95.55. Both still well above pre-war levels, but the war premium is being aggressively unwound. Equities surged. European stocks gained nearly 4% in early trading. Asian markets posted strong gains. Wall Street futures pointed to gains of between 2.5 and 3.2%. The U.S. dollar fell broadly. The dollar index eased to 98.819. Having been the safe haven of choice throughout the conflict, gold climbed 2.4% to $4,814 per ounce. And in the bond market, U.S. Treasuries surged. The 10-year yield dropped to 4.244%, the lowest since mid-March. The 2-year note fell to 3.7235%. Eurozone yields also dropped sharply as traders scaled back bets on future ECB rate hikes. Now here's the part that matters beyond the headlines. The market is not calling this a lasting peace. It is calling it relief. There is a meaningful difference. Martin Wetton, head of financial market strategy at Westpac, put it clearly. A 2-week ceasefire does not mean investors are taking on new risk. It would take a lasting resolution to change positioning in any structural way. A trusted source flagged that oil prices are likely to remain structurally higher for some time, regardless of the ceasefire, given the damage already done to energy infrastructure across the region over the past month. For bonds, the key variable going forward is oil. In the very near term, the ceasefire may remove the impulse for the ECB to hike rates at its April meeting, but with 3 weeks still to go, that is far from settled. So to summarize, relief is real, but it is cautious. Oil is down hard, equities are up, the dollar is softer, and bonds are rallying on rate cut hopes. The next 2 weeks of ceasefire negotiations will determine whether this move has legs, or whether markets have to reprice all of this again. Watch oil, watch the negotiations, and watch whether 4,814 holds as a new floor for gold, or whether the risk-on shift starts pulling capital away from safe havens. If this breakdown was useful, hit subscribe and leave a like. This is Ray Watterson. Stay sharp, and I'll see you in the next one.